Since this video turned out to be so long, I'm going to have to split it into two because I am not allowed to make videos past 15 minutes. So here's part one. What's going on today, YouTube? Hope you guys all had a great day. And today, I'm going to talk to you about two things. 4 tips for selecting your own stocks as a beginner. This is more for the enterprising investor. And what I mean by this is someone who's looking for a little more riskier plays, but could offer far more reward. Second, I'm going to go over 4 strategies Warren Buffett uses. Okay, so if you're new to my channel, I make daily uploads about the stock market, just trying to teach you guys things I wish I knew when I started. I do not give advice when to buy or sell. I just give you the information that I think will help you out in making your choices. So yeah, if you like this kind of content, subscribe to my channel, turn on that notification bell to know when I'm uploading, leave a like and comment on my videos. Helps me figure out if you guys like this content or what I need to change to help you guys out more than I already am. So to start off, one thing that would be very wise to do, but I know not a lot of people do it because they want to get in as soon as they can, as fast as they can, start making money. But would be when you're selecting your own stocks, when you're first starting out, it would be wise to paper trade. If you set up an account with TD Ameritrade, you can go to pay their paper money. It's just fake money. And I mean, with these stock selection habits, you're probably going to have to wait a year or a few years to see how you do on selecting individual stocks. But if you're younger and you just want to get started and see like how this all works, like you don't have an account yet, you don't have any money to invest yet, it'd be a good time. Just go do your research on your own stocks, pick them out, and use fake money. And when you use fake money, there's no risk. I mean, you can see how you do, see your returns, and then once you actually have money to invest, start putting money in. Number 1, first tip on being more successful. When you are going through these SEC filings, make sure they are easy to understand. The easier the SEC filings are to understand, most likely the easier the company is to understand. What they do is easier to understand, and it shows they are not trying to hide anything. When you get into SEC filings and you find a whole bunch of footnotes or go here or a whole bunch of big words, they're probably trying to hide something they're doing. That could be one major red flag. Number 2, I think is very, very important. If the owners have a lot of their own money invested into a company, it's a very good sign they actually care what they're doing and they want this company to succeed because it's their money, guys. Like, anytime anyone has their individual money in something, they put it in expecting it to go up. They don't want to lose money on what they're doing. It's their own money, so they care more. That's why a lot of people, I've had other videos, but a lot of mutual funds, if the fund manager has a lot of his own money invested into what he's also doing, he probably cares more. I mean, it's sad to say, but there's a lot of people out there, they're like, it's other people's money, so what do I care? So that's something else to watch out for. Third, in the SEC filings, if you're looking at them, there's a clear vision where they want this company to go and where it is going, and they're following that plan. You can find their plan of action inside these SEC filings, and if you're a long-term investor, you're going to read these often. And if they keep on saying they're going to do something and complete their task, they reach their goal, it's a good sign they're moving forward and they want this company to do better and better. Number 4, and this one's it's very important. When you invest your money into a stock, have a plan. Have a plan. I know Warren Buffett says don't invest in anything you want to stay into for 10 years, but have a plan yourself. If you only want to invest in this company for 5 years, that's okay. You just have a plan and stick to it. So you say minimum 5 years you want to invest in this company. Do not pull your money out no matter what the market does. If you actually believe this company has potential, you don't want to put it in. Here, I'll even use this chart in the background, for example. Say you just decided when we had this little crash in the market, like right in here. This is a 1 year day chart. So all these candles are a day. Say you finally looked through the financials, everything, you wanted to invest in Bank of America. You did it right here. And then the next day, we had that little market correction or crash, whatever you want to call it. Right now, it looked like a correction, but no one's sure yet. But anyways, if you put your money in here and it fell and you took it out the next day, you're not sticking to your plan. That's what I'm getting at. If you would have stuck to your plan, I know no one knows what's going to happen in the future, but if you planned on investing in this for 5 years, you don't care about the day-to-day fluctuations. And look, and I'm sure people did it. I'm sure people invested up here. They saw it crash down and they lost. I mean, it's only $2 per share, but still. They probably lost on $2 per share because they took their money out here. And now, guess what? It's right back to where it was pretty much. So have a plan, stick to it. Now, the 4 strategies Warren Buffett uses to pick out his stocks. These aren't all of them, but these are 4 of his main ones. The one thing he looks for are strong consumer brands. These are brands that are big name brands, have a lot of different products they sell, and he doesn't see them going anywhere for a long time. So, I mean, you could look at any sports brands like Nike, Adidas, Reebok, Under Armour. You could look at phone companies like Verizon, Sprint, T-Mobile. I'm just giving you guys examples. I'm not saying these are good or bad companies, just examples of what a strong consumer brand might be. Number 2, he looks for businesses he can easily understand. The example I will use for this is Coca-Cola. He has invested in this and he still is. What I'm saying, business, okay, when he invested in this, it's a business that sells soda. They sell Coca-Cola. That's all they do. That's understandable. You sell a drink, you make money off of it. Those are the kinds of companies he looks for. That could go for any car company or bank. It's a business that you can easily understand. No one's gonna, like Coca-Cola, they have patents, whatever, to protect their drink. No one can just start making Coca-Cola, stealing the recipe and make Coca-Cola. They can make other things that they try to replicate and make it better than Coca-Cola, but people out there like their Coca-Cola. Easy to understand. Make a drink, sell it. That's it. So if you like this video, leave a like, and you want to see more content like this, subscribe to my channel. Hit that notification bell so you know when I'm uploading. And you can follow me on Instagram too. I always post on there when I'm uploading videos. So I'll see you guys tomorrow.